I'll still be around. Apparently, I wanted to just hear Shivashish also. He's got
Yes,
a so
yes.
I'm going to hear.
Now he will be discussing about the most. I can say again those issues which actually breaking down the real estate market or helping out the real estate market, because it's totally dependent upon the percentage work, and if we do the wrong calculations, our whole business get down. So Shivashish ji, we welcome you on the dais. The whole dais is for you right now here. Please, we would be wonderful to listen you. Welcome.
Thank you, Shashank sir. Thank you, Mohit sir, for wonderful deliberation. Thank you, Vineet sir, and thank you other seniors for giving this opportunity. So I'm just sharing my screen. I would be discussing on recent litigations which are being happening across the board, as in most of the clients are suffering from those litigations, and accordingly what best course of action which we can adopt considering the various ratios of the court and provision circulars. So just sharing the hope this slide is visible.
Yes,
This is visible, right?
Yes, perfectly.
Yes. So I would be starting with directly jumping over to, just a second. Directly jumping over to GST law vis-a-vis Constitution of India. So what happens is that we have seen in many of the cases that GST registration of taxpayers are being cancelled, and the time limit to file application for revocation of registration, cancellation of registration has also been expired. The time limit to file appeal against the cancellation has already been expired. During the COVID period, the government extended that time limit. However, that time limit is not prevalent as of now. So that means if in case your registration has been cancelled, how you're going to operate the business? So that was a concern before one of the Honorable High Court. What happened was the person was carpenter, and the person's registration, GST registration, was cancelled, and the time limit to file application for revocation of cancellation of registration has had already been expired. The time limit to file the appeal had already been expired. Now in that case, what the person did was he approached appellate authority. The appeal was dismissed, and directly he went to the High Court and stated that right to carry on the business is a fundamental right. It is part of the right to life. If in case my GST registration is not going to be revived, that means I would not be able to earn the livelihood, and accordingly it is going to violate my right to life. Right to life includes rights which are there to secure your livelihood, and as such, if a person is not able to do business, because for doing the business GST registration is compulsory, and if a person is not able to do the business, how that person is going to earn the livelihood? And this was the question which was put forth before Uttarakhand High Court, and various other high courts have already ruled on this, that if the person is ready to file his returns, ready to pay the late fee which is applicable, ready to undertake all the compliances as on date which are there, which are pending on the date when the registration is going to be revoked, as in the registration is going to be revived, there is no reason that the registration of that particular person should not be revived. And basis this, the court ruled that irrespective of the fact that right to appeal, your appeal timeline has been expired, your revocation timeline has been expired under the GST law, when your business is being suffering, and the sufferance is on account of violation of one of the fundamental right, that is right to life, which is enshrined in the Article 21 of the Constitution of India, and accordingly it was directed by Honorable High Court that the registration has to be restored, subject to person undertaking all the compliances and completing all the late fee penal consequences are whichever are applicable has been added to by that person. Now here one thing is relevant to note, that there was one circular which was issued by GST department And in that circular, it was stated that if the same person is applying for new registration, even in that case, new registration is not going to be granted to that person, because GST department is going to verify the PAN number, because our GST registration is linked with the PAN number. So GST department is going to verify the PAN number, and that PAN number would be showing that your registration has been cancelled for the reasons of various non-compliances. And for this reason, finding a solution that new registration would be granted in the same name, that is not possible. And for that reason, the person appraised this honorable, one of the honorable high courts, stating that I have to revive my same registration, because that registration number must have been given to various clients and vendors whosoever have been involved in undertaking business transaction with that person. So High Court ruled accordingly. So this was the first case which is being seen across India, wherein the registration are being cancelled, suspended, and the timeline to file the revocation and appeal has also been expired. If anyone has any question, I am seeing the chat box also. I am seeing the question answer box also. I am happy to take all the queries and answer those queries to the best of my understanding. Now, this is another very interesting case wherein this was decided by Honorable Delhi High Court. What happened was, there was earlier exemption. Exemption was that if in case residential premises are rented to, residential premises are given on rent, those renting services are exempt from GST. What does it say? Residential premises given on rent. Simply, there were two parameters. Residential premises, if given on rent, that is exempt from GST liability. Now that clause has been amended, and that clause has been amended effective July. 18 July, the notification is effective from, wherein what has been pointed out is that if the residential premises is rented to a registered person, if the residential premises is rented to a registered person, in that case, GST liability is going to arise. And who is going to pay the GST liability? The GST liability is going to be paid by the recipient. The registered person who has taken the premises on the rent is going to pay the GST liability on reverse charge basis at the rate 18%. Now, let us take an example of guest house. We have seen there are various guest house which are being taken by the corporate organizations. Earlier, there were various rulings, and because of that entry in the notification, it was ruled out that those renting of residential premises or those renting of guest houses is exempt from GST. There is no GST liability in that case. However, because of this notification, now even in case a person is taking a guest house and that person is a registered person, so let us say there is a corporate which has taken guest house for its employees, then in that case there is liability to pay GST on RCM basis. Now what happens is, this case, one of the facts relating to this case traveled to High Court, Delhi High Court, wherein let us say I am a proprietor, I am a registered person, and the registration is at the PAN level. Sorry. Now that proprietor has also taken for his personal purposes one of the residential premises on rent. One of the residential premises has been taken on rent by that registered proprietor. Now let us say I am a CA, I am a registered proprietor under GST, I have a GST number. However, for my residential purposes, I have taken a residential building on rent. That too for my personal purposes. In this case, the case traveled to High Court, and it was the counter affidavit of the department was called, wherein the department accepted that we have to change the wordings. We have to change the wordings of that particular amendment which has come up, wherein residential dwellings rented to registered person is currently mentioned. We need to amend this and say registered premises, residential dwelling rented to registered person in the course or furtherance of business. In the course or furtherance of business. So it was pointed out by the High Court that the necessary amendment should be brought in force, and the statement of the respondent, that is Union of India and department, was recorded, wherein it was specifically pointed out that if the registered premises is taken on rent by a registered person, but for the personal purposes, in that case, there won't be any GST liability. The government is going to soon amend that that entry which has been notified in July 2017. But till that time, there is one judgment of Delhi High Court which I am discussing, which specifically states that if the registered person has taken the premises, residential premises on rent for his personal purposes, and the expense is not accounted for in the books of accounts of that proprietorship, in that case, there won't be any GST liability. So this statement has been recorded of the Union of India, and basis that judgment, you can take the benefit of this current situation. Similarly, it was also pointed out in the counter affidavit that, let us say, the premises is being taken by the partner, one of the partner of the partnership firm, even though that partnership firm is a registered person. In that case, there won't be any liability. No, again, it was clarified in the counter affidavit. If the partner is taking that property for the personal purposes, even though the partnership firm is registered, because many times it happens that in law, they say that partners and partnership firm is one and the same person. So for this reason, this clarification was required, wherein they stated that even if the partner is taking a property on rent, residential property, in that case, there won't be any GST liability if the same has been taken for the personal purposes, and the same is not in the course or furtherance of business, and the same is not accounted for in the books of accounts of the partnership firm. So this was another case which I wanted to discuss. Any questions with anyone? I am happy to answer that.
शिवाशीष जी, अभी भी मेरे को लगता है जो लास्ट रूलिंग आई है आपकी अभी, I believe that is not from the Supreme Court, na?
That is not from the Supreme Court. This is from the Honorable Delhi High Court.
But I believe there is still the ambiguity in the residential dwelling unit.
There seems to be any some ambiguity. But see, even when without this Honorable High Court ruling of Delhi High Court ruling, I can justify the stance that there is no liability to pay GST on RCM basis. The reason why I say so is because we have Section 7. Section 7 says supply means which happens in the course or furtherance of business. When we say that I have taken a property on personal basis for my personal purposes, there is no business which is involved. It is never in the course or furtherance of business. So even without this case, I was discussing with some of the senior professionals, wherein we came out with this ratio that take this proposition, equate this proposition with Section 7. Section 7 says GST is applicable when the transaction is happening in the course or furtherance of business. Whenever there is a personal angle which is involved, there cannot be said that the transaction is in the course or the furtherance of business. That's if the charging section is not getting attracted, how can we, apply a tax, on that particular transaction when the charging section itself says that the transaction should be in the course or furtherance of business.
Got it.
Hope you understood my point, sir.
Yes, please.
Yes. So next is amount of pre-deposit. So I am discussing all those case studies which are very relevant, and we are seeing various doubts which are coming up in our circle regarding those queries. And I'm trying to cover only those cases and not one of the, relating to any specific sector. So next is amount of pre-deposit through electronic cash ledger. Whether we can pay the amount of pre-deposit through electronic cash ledger. We are well aware that many of our clients are receiving orders in DRC 07, wherein we are required to file in relation to against that we are required to file appeal. Now, while filing that appeal, APL appeal 01 form, whether we can pay the amount of pre-deposit, that is 10% of the amount in dispute, of the tax in dispute, whether we can pay that amount through electronic credit ledger, or that amount has to be paid through electronic cash ledger only. So I am filing an appeal, and whether that amount can be paid through electronic credit ledger, the amount of pre-deposit, or that has to be paid through electronic cash ledger only. Now, what happened was one of the case traveled to Odisha High Court, wherein the Odisha High Court stated that the amount of pre-deposit is not an output tax liability. And accordingly, you cannot use electronic credit ledger. When we go to section 49, section 49 specifically says that electronic credit ledger can be debited for the payment of output tax liability, subject to rules and conditions thereon. The section specifically says that electronic credit ledger can be used for the payment of output tax liability. Now, when we go to the definition of output tax liability, it says the tax which is chargeable on the outward supply, the tax which is chargeable on the taxable supplies which that person is effecting. Now, the case traveled to Odisha High Court, and Odisha High Court specifically stated that electronic credit ledger can be debited only for the payment of output tax liability. Payment of pre-deposit, as the name also suggests, it is a pre-deposit. You are just depositing some amount. It is not output tax liability. Output tax liability is tax chargeable, and you are depositing the amount. It is just like you are giving to department a deposit, and accordingly, Odisha High Court ruled that you cannot adjust pre-deposit payment for pre-deposit through electronic credit ledger, and you have to pay through electronic cash ledger only. The amount has to be paid through electronic cash ledger only. Recently, one of the circular was issued by CBIC, wherein it was stated that electronic credit ledger can be used for payment of output tax liability as self-assessed or in the course of any proceeding. I am repeating this again. Electronic credit ledger can be used for payment of any output tax liability as self-assessed or in the course of any proceeding. Now, self-assessed means that is GST 3B. Now, the department says, as per the circular, you can use electronic cash ledger, credit ledger for the payment of output tax liability as self-assessed in GST 3B. And it further says, in the course of any proceeding. Now, the circular specifically doesn't say that in the course of proceeding is going to include appeal also. It is going to include revision also. For this reason, still that circular is not clearly bringing out the position that pre-deposit can be paid using the electronic cash ledger also, credit ledger also. It simply says in the course of any proceeding. Now the proceeding has to be interpreted, and the department is going to interpret that in the course of any proceeding as per its own convenience. First point. However, Bombay High Court recently given the benefit of that circular, and in the course of any proceeding was considered to include appeal also, and for that reason Bombay High Court specifically stated that pre-deposit can be paid through electronic credit ledger also. Similarly, Allahabad High Court has also recently ruled that amount of pre-deposit can be paid through electronic credit ledger also. However, I have my own views. Till the time it is further clarified, the circular is issued to give more clarity. The demands, the dispute is continuously going to be raised, because when we go to section 107, which talks about pre-deposit, it specifically says it is a sum. You are paying a sum. You are not paying a tax, so that you can equate this with the output tax liability. You are paying a sum which is in the nature of deposit, and accordingly that sum cannot be debited from the electronic credit ledger, because electronic credit ledger can be debited through output tax liability only. And for that reason, I have my own views that the department is going to raise the disputes till it is being clarified through circular or any other mode. And till that time, to avoid dispute and so that our appeal gets admitted, it is suggested that the amount should be paid through electronic cash ledger if the client is rich enough to pay that amount again through electronic cash ledger, 10% of the tax amount in dispute. Otherwise, you have to approach the High Court to get even the appeal admitted. Since the High Court can only issue a direction that the amount which is being debited through electronic credit ledger is also valid, and accordingly the appeal can be decided, and the appeal is going to be decided on merits. So any concern with anyone at this particular point of time, we can discuss. Now I am coming to another interesting case. It is in relation to inverted duty structure. Refund on account of inverted duty structure. What is inverted duty structure? Inverted duty structure is where the rate of tax, rate of GST on inputs is more than the rate of tax on output supplies. Where the rate of GST on inputs is more than the rate of GST on output supplies. Now let us say, take an example, take the example of garments. The garments are taxable at the rate of 5%, 12%. The inputs, that is various raw materials, fabrics, or let us say services which are being received, are taxable at the rate of 18%. Another example can be e-vehicle. E-vehicles are on the output side, these are taxable at the rate of 5%. However, on the input side, there are various inputs which are required to be procured, and those are taxable at the respective rates, that is 18%, 12%, 28%. And for this reason, what happens is the credit gets accumulated because your rate on inputs. So let's take an example. Your rate of tax on inputs, which is let us say the cost of inputs is 100. You are paying the tax at the rate 18%, and that comes to 18 rupees. And on the output, let us say adding 30% margin, it is 130. The value of the output supplies 130, and for 130 the tax rate is 5%. So that comes out to 6.5, 7 rupees. And on the input side, you have paid the tax of 18 rupees. And for this reason, your credit gets accumulated. And for this reason, the government has created a provision that we are going to allow inverted duty structure refund. Now, recently, Honorable Supreme Court has affirmed the ruling of Madras High Court, wherein it was ruled that while allowing the refund of input tax credit, the refund will only be on account of the inputs and not input services. You cannot claim the refund of input services. You can only claim the refund of inputs. Gujarat High Court, in the case of VKC Footwear, stated that input tax credit includes both, and accordingly the refund should be allowed of inputs and input services, but that ratio has been turned down by the Honorable Supreme Court, and currently the law is that the refund of only inputs is going to be allowed. Now, in this peculiar situation, what happened was, there is one notification which specifically stated that scientific and research equipments to certain set of organizations. So let us say there is IIT. Let us say there is ISRO, Indian Space Research Organization. To these organizations, or let us say there are PSUs. To these organizations, scientific equipments, research equipments can be supplied at a concessional rate of 5%. These can be supplied at a concessional rate of 5%. The examples which I discussed earlier was that the inputs are different. You are purchasing fabric and you are manufacturing, you are doing production, and you are selling garments. However, in this case, the example is you are a trader. Your inputs is also same, your outputs is also same, but just because of that concessional rate notification, your output supplies are liable to be taxed at the rate of 5%. Now the government, the department has always stated that there is no change in the input and output, and accordingly the refund is not eligible to you. There is no change in the input and output. There is no manufacturing. There is no production. There is no job work. There is no repair maintenance. There is nothing which you have done. You have just earned the margin. But who knows, them even earning margin is so much difficult in the current times. Anyways, what there was one circular which was also released by the department, CBIC, wherein it was specifically stated that wherein the input and output is the same, in that case, the refund of inverted duty structure cannot be claimed. The case traveled to High Court, Calcutta High Court, and various other high courts also, wherein Section 54(3) was analyzed. And after the analysis, it was pointed out that there is no requirement in this section that there should be any manufacturing process, there should be any production process, there should be any job work process, there should be any repair and maintenance process. It was only required that there should be accumulation of input tax credit, and that too because the rate of inputs is higher than the rate of output. In my case, as a trader, the rate of output is less because of this concessional notification, and accordingly, Honorable High Court allowed the refund. Thereafter, this ratio was followed by the other high courts also, and the circular was also amended. That is, circular number 173 was issued. Earlier number circular was 135, wherein it was specifically pointed out that the refund will not be allowed. However, 173 was issued later on after these judgments of High Court, stating that the refund will be allowed, and because of this concessional notification, the person can claim the refund. So I'm moving to next slide. If anyone has any question, I am again happy to answer the queries. Shashank sir, Vineet sir, any queries from your side, sir?
Please, sir, please.
Okay. Now this is one of the case in relation to budgetary support scheme. This case has the facts of one of my client. I argued before Uttarakhand High Court, wherein we have got this stay. The facts of, I'll just give you some background. The background is that to promote industrialization in the hilly areas, that is northeastern states, Jammu Kashmir, Uttarakhand, Himachal, Sikkim also, excise was exempted. Excise duty was exempted at that point of time, where before the GST. Before 1st July 2017, excise was exempted because you are setting up a new industrial unit, you are promoting industrialization, obviously subject to environmental norms and everything. You are setting up an industry, you are giving employment to people, local people, and accordingly your excise duty, the goods which you have manufactured and transfer those goods from that particular industrial unit which is located in hilly area, in those notified hilly area states, in that case excise duty was exempted. And in those notifications, it was specifically pointed out, just like in Income Tax Act, we have time-bound exemptions. Even in those notifications, there were time-bound notifications. That is, for 10 years, we are going to give you exemption. Let us say for 15 years, we are going to give you exemption. And basis that, the person, the taxable person, had set up his industrial unit, had increased his plant and machinery capacity so that further production can be increased as required by the notification, excise duty notification, exemption notification. Now let us say I established this unit in year 2012. And that purpose of exemption was granted to me for 10 years. Now in 2017, GST came into picture. Now, what happens after 2017? From July to October, there was no sign that this notification, this benefit is going to be continued. People were arguing that it is a promissory estoppel. You are stopped from doing anything which you have promised. Contrary, you are stopped from doing anything contrary to thing which you have promised. So government promised that if in case you are going to set up the industrial unit, we are going to exempt your tax liabilities, indirect tax liabilities for 10 years. The people were arguing like that, However, promissory estoppels in case of government policies and all has recently been declined by the Honorable Supreme Court, wherein Supreme Court has stated that there cannot be promissory estoppel in case of government policies. Now leave this apart. In this case, the government recognized this government as a goodwill gesture. As a goodwill gesture, this specifically states this is as a goodwill gesture. The government stated that we are going to provide you budgetary support. We are going to provide you budgetary support, and this budgetary support notification has been issued by Ministry of Commerce and Industry. So this is a separate ministry from the Ministry of Finance. Ministry of Finance earlier issued the notification exempting excise duty. However, this budgetary support to those units only which were eligible for excise duty exemption has been issued by Ministry of Commerce and Industry. Now, what happens is, in this case is, budgetary support is given as a percentage of your tax liability, which is paid in cash. Now, what happens is, let us say you have 10 rupees of CGST liability. You are going to adjust input tax credit. Let us say 4 rupees you adjusted, and the balance is 6 rupees, which is paid through electronic cash ledger. And that rupees 6 will be multiplied by X percentage, that is 29% or 58%. And that amount, whatever amount comes, let us say 3 multiplied by 50% for the sake of our convenience, 1.5 is going to be the budgetary support amount, which is going to be eligible to you, and you would be getting the refund back of that amount. And there is a separate process for filing of that refund application. So let me explain this again. So budgetary support is given as a percentage of the amount of tax GST amount which has been paid in cash after setting off ITC. Now in this case, what happened was, the facts are like this. Obviously, these are not the facts of this client, but since we analyze this notification, there is high chances of tax arbitrage which can be done. Now let us say a person has multiple registrations. I have a unit in Uttarakhand and I have a unit in Delhi. I have separate registrations. Now let us say during the excise times, what happens is, I was manufacturing the goods in Uttarakhand and transferring those goods to my depot or warehouse in Delhi and selling those goods from Delhi to consumers or to dealers, whosoever is there. While I was transferring the goods at the excise during the excise times, there was upfront exemption. So let us say I decided the price of particular good to be 60 rupees, and on 60, I am claiming that excise duty exemption. There is upfront exemption. There is no requirement that first I have to pay the tax and thereafter I am going to claim it back. However, in case of budgetary support, what happens is that first you have to pay the amount and then you will be claiming the budgetary support amount. Now, let's take the example. The price of that 60 was increased to 70. This is tax arbitrage. We are putting finance related arbitrage things under the tax, in the tax. Now, let us say I increase the price from 60 to 70. What happens is, when I increase the price from 60 to 70, my budgetary support goes up, because on 70, my liability would be increased, GST liability would be increased. I would be having certain set amount of input tax credit. I would be reducing that input tax credit, and accordingly, my output tax liability is going to be increased. On 70, my output tax liability would be X plus 1. On 60, it would be X. So on 70, it is X plus 1. And X plus 1 multiplied by the rate of budgetary support notification, budgetary support rate which is available, it would be on a higher side. So let us say it is 28%, 29% or 58%. So 29% or 58% of X plus 1 is going to be higher in any case than what is being coming out of rupees X. Now you are going to say you are going to pay higher tax. But see, the point is that whatever higher tax I am paying the tax on 70 rupees, no doubt. For this reason, I have increased my budgetary support. But that 70 rupees tax, whatever tax is coming on 70 rupees is going to be my input tax credit in Delhi. it is going to become my input tax credit in Delhi. In a way, what I have done is the cash amount which has been increased by changing my transfer price from 60 to 70. The percentage which I am going to apply would be now on 70. And accordingly on 70 rupees, I would be claiming the budgetary support amount. However, simultaneously, I would be claiming input tax credit in Delhi because I am just transferring those goods from Uttarakhand to Delhi. And my input tax credit in Delhi is going to be increased. The final price is 100 rupees. In any case, my final liability is 18 minus input tax credit, which I am going to receive from the units, which is located in Uttarakhand. What happens is I have increased my budgetary support amount. So this is the tax arbitrage benefit, which many people could have planned and many people have planned also. Now what happened was DGJ investigated this case, and they specifically stated that your transfer prices has been increased, and the net effect of increasing this transfer price is that you are claiming excess amount of budgetary support, and the argument that you are in a way paying excess amount of output tax liability is not true, because at the end you are eligible for input tax credit, and accordingly you would be utilizing that input tax credit. But as far as Uttarakhand is concerned, you have claimed the excess amount of budgetary support. Now, what were our grounds? Our grounds were that there was upfront exemption. First thing, I haven't increased the transfer price. The transfer price is increased only to the extent which is because of the fact that under GST there is a concept of distinct persons. Distinct persons require that I should charge GST on whatever amount, whatever goods I am transferring from Uttarakhand to Delhi. Earlier there was upfront exemption, even VAT was exempted, even excise was exempted. So my price from 60 to 70 has been changed only on account of GST. First reason. The second reason is the notification says if in case there is any variations or there is any change in value additions, the same can be verified. Now in our case, all these things were verified. The assistant commissioner, who is the nodal officer there, has already verified. It is specifically mentioned in the order that you can verify it. You can verify such excess value additions. Whatever is happening, you can verify the change in transfer price. You can verify that you have already verified that. Now you are recalling your orders back. You are just recalling those orders back. And your verification, you haven't done any verification because all the investigation was done by DGGI, which is not the jurisdictional authority to investigate this case. The budgetary support notification has been issued by Ministry of Commerce and Industry. In case of Ministry and Commerce and Industry, DGGI is not the proper officer to investigate this case. So this is another plea which was taken. We are well aware that in case there is any jurisdictional issue, that goes to the roots of that matter, and accordingly that thing can be questioned, and DGGI didn't had any right to investigate this change in transfer price which has happened. The another ground which we have taken is that Rule 28 specifically says that whatever price you decide between two distinct persons is considered to be the open market value, and accordingly that is to be accepted by the department. And accordingly, for these XYZ reasons, our claim is valid enough. The demand note was issued in this case, and that demand note has been stayed by Honorable Uttarakhand High Court. So this is in relation to one of the client, but all the facts are not of the client. But yes, when we look into these notifications, and I tell you that these kind of notifications are being issued by UP government also for establishing units in Noida also, and various other places wherever they are promoting industrialization. So we can see that aspect and see the whatever is the scope of legitimate tax planning. Any questions till now? I'm happy to take that. Now moving to next case, again, very relevant case, that whether GST registration is required in the state where project is executed. We have seen various things which were coming out when the GST law was introduced, that and even various FAQs were issued, that you are not required to take registration in a particular state where your site is going on. Or let us say one FAQ was issued wherein, let us say, South Indian Bank is there, and that South Indian Bank has ATMs in, let us say, across all the states in India. Whether that ATM can be considered to be place of business, and accordingly whether there is a requirement to undertake registrations in all the states just because of that ATM. This was clarified that ATM in itself doesn't qualify to be place of business, and various clarifications were issued in the similar fashion for real estate sector, for works contract related things. So recently this AR has come up, wherein it has been specifically clarified, the ruling has been passed that location of supplier is relevant and not the place of supply. In your transaction, place of supply may be coming out to be a XYZ place because of section 12 and 13 of IGST Act. However, what we have to say is location of supplier. I may be located here, the place of supply may be in Bihar. In that case, the location of supplier is Delhi and place of supply is Bihar. I have to see that what is the location of supplier, that is in Delhi. However, in this case, what happened was that when you are executing any work contracts related thing, or let us say real estate related thing, which involves setting up of many things like rooms, or let us say you have to set up a small thing wherein those people can stay, engineers who are coming there can stay, wherever you can put those extra material which is there, you can keep that extra material. You have to create a small site office at that particular location, and for that reason advance ruling ruled that you are required to take registration in that particular state also, in the state of Bihar which we discussed, wherein your site work is going on. Now let us say a person take an argument, let's see, I am a contractor, I take the contracts in Delhi, I have taken the registration. For all the other sites, I get my work done through subcontractors. Now, in that case, also I am required to take registration in those sites where the work is getting executed through subcontractors. This was clarified. This was ruled by this advance ruling, and this is also my view. Also, it is better to take registration in all the states wherever our site project work is going on, because Section 22 is not clear. It simply says from wherever your supply is happening, from wherever your supply is happening, you are required to take registration in that state. Now, how you are going to distinguish that your supply is happening from Delhi and not from Bihar? And similarly, Honorable Delhi High Court in one of the case where tender was being applied to a against a government application was being applied against a government floated tender, wherein what happened was, let us say the person was registered in Delhi, the tender was in relation to, let us say, Haryana. Now the case traveled to the High Court, and High Court stated that if the tender has one of the condition that you should have registration in that particular state, it cannot be said that that is ultra vires the GST Act, because GST Act also says that wherever your site work is happening, you are required to take registration in that state. So for that reason, this observation of advance ruling and this observation of Honorable Delhi High Court also, keeping all these things in mind, it is suggested that we should take registration in all the states wherever our site work or let us say project is going on. At least we should take the registration wherever our bigger projects, wherever our client bigger projects, whether through subcontractors, are going on. Now coming to next case, that is BPO, KPO, LPO is not intermediary. BPO KPO, LPO is not intermediary. These are back offices. This is one of the ruling of Punjab and Haryana High Court in the case of Genpact, wherein it has been ruled by Punjab and Haryana High Court that Genpact is not an intermediary because of the following reasons. Various parameters I have put on the slide also. Various parameters were seen, such as turnover is the principal value of the services and it is not commission which I am earning or a percentage of the original value of the contract which is happening. It is not the percentage of the original value of the contract, or it is not in the nature of commission. We have to see the agreement. We have to see the agreement, the terms which are being mentioned, scope of services of the agreement. We should analyze this properly. The thumb rule is that wherever the person is involved in minute details in the negotiations, it is happening at the micro level. In that case, the chances are higher that the case is going to fall under intermediary. However, where the person is doing macro level things, let us say he is doing accounting, and it is really not linked to that particular transaction, you are not having negotiation. Just because you are having communication with the clients of the clients of your client doesn't make you intermediary. So in this case, the Genpact was, let us say, having communication with the clients of X. X was the person with which the Genpact had the contract. So if in case the Genpact is having communication with the clients of X, that doesn't mean that the Genpact is intermediary in this case. So all these factors has to be looked on. It has to be looked on that who is primarily responsible for the service delivery and risk, who is undertaking that risk. The agreement between the Genpact and X should be on principal to principal basis. There should be principal to principal clause. The agreement should state out words like it is a consultancy agreement, market services agreement, and not a negotiation agreement, commission agreement, or brokerage agreement. And rest of the guidelines are also provided in the circular number 159. This is a detailed circular which has been issued by CBIC, and this gives various points on which things can be planned. The next case is again very relevant, that we have seen various clients wherein the vehicle has been detained, and the orders has been passed for XYZ violation of e-way bill regulations, and accordingly 100% tax, 100% penalty, or 200% penalty have been recovered from the client. Now what happens is we have paid that amount in, let us say, XYZ state. We are registered in, let us say, ABC state, and once the vehicle has been released after payment of penalty and tax, nothing further we can, there is no recourse which we can take. Even though under GST Act, there is a specific provision, that is the same section 107, which says if any person who is aggrieved by any order or decision under this act, it doesn't say under this act except section 129 or except 130. It says under this act. So that means if an order has been passed under section 129, which deals with the violation of e-way bill related issues, my appeal can be filed. However, the vehicle has been released after payment. They have created a TRN, or let us say they have given manual forms, physical forms, and there is no mechanism to file the appeal, because appeal at the end of the day, has to be filed online. So what is the recourse in that? Now recently, this circular has also been issued by Kerala government, wherein it has been specifically clarified that MOV 9. So what happens is, in these cases, MOV 6, that is detention, is issued, MOV 7 is issued, but MOV 9, that is the order, is not issued, or the order is issued manually. If the order has been issued manually, first what we should do, what we should suggest to our clients is that MOV 9 must be issued. There is a format which is provided in one of the circulars which was issued in year 2018, wherein MOV 9 format has been provided, which provides the format for passing an order under section 129. So that MOV 9 should be issued. If that MOV 9 has been issued manually, in that case, we should request the proper officer, whosoever is there, that MOV 9, the copy should be given to you, and second, the copy should be passed to that jurisdictional officer, whosoever is our jurisdictional officer, because these are squad officers. The other one is jurisdictional officer. The copy should be given to that jurisdictional officer so that DRC 07 can be issued. Because for filing the appeal, DRC 07 is required. DRC 07 should be displayed online, only then you can file the appeal. First thing. Second thing, if in case MOV 09 has been issued online, then that's perfectly fine. We should request that officer, squad officer, or the jurisdictional officer, then and there itself, that it is requested to issue DRC 07. Because at the end of the day, you can file the appeal only when DRC 07 is available. And for filing, for having that DRC 07, it is essential that MOV 09 should be issued. If in case it is issued manually, we should request that officer to upload this online, or we should request that officer to pass it on to the jurisdictional officer so that DRC 07 can be issued and I can file the appeal. And if in case this has been issued online, we should request that officer that it is requested to please issue DRC 07. DRC 07 is summary order. It is a summary order that should be issued so that I can file the appeal. And this has been clarified by Kerala government circular. This haven't been brought out by CBIC circular. Kerala government circular specifically says that right to file appeal is a statutory remedy. The person cannot be, the officer cannot prejudice a person by not giving, by not uploading the order, or by not giving that person right, by snatching the right of that person to file the appeal. If that person, that squad officer is not going to issue MOV 09, that in how that person is going to file the appeal. So for this reason, this has been clarified by Kerala High Court, Kerala government circular, that DRC 7 MOV 09 issuance online is must. MOV 09 should be issued online so that DRC 07 can be issued by the jurisdictional officer or by the squad officer. Actually, this circular has been issued pursuant to a direction which was issued by Kerala High Court, wherein the department contended that section 129 says all the proceedings are completed if in case the tax and penalty has been paid. But Kerala High Court gave a direction to the government stating that all the proceedings are completed just for that section and goods can be released. It doesn't mean that all the proceedings and right to appeal has also been closed. And for this reason, the Kerala government has come out with this circular. And since the law is same everywhere, so we can apply this circular to other locations also. It is very relevant. We read this circular. This circular gives a lot of clarity on this issue. Next is set off of liability is important. Set off of liability is important. Many times it happens that we have deposited the amount in electronic cash ledger and the amount is not set off. The amount is not set off and the return is not filed. So what steps are involved in filing of return in payment of tax? So first we have to deposit the amount. We have to create the challan. The amount gets reflected in electronic cash ledger. Then we have to click the button of set off. There is a button called set off compute tax liabilities. This is what it is named. And thereafter it gives the filing option. Now, in one of the case, what happened was person has deposited the money in electronic cash ledger and there was no compute liabilities or set off button which was clicked. And accordingly, the person approached High Court and stated that since I have deposited the amount in the electronic cash ledger and as such, there cannot be any interest or penalty which can be applied because I have paid the tax. However, the court ruled that payment means there should be set off. and set off happens when you click that button, and accordingly interest is going to be applicable even for the period when you were having appropriate amount of the cash in the electronic cash ledger, though the amount was not set off. Now let's take a peculiar case. So this we have discussed, we have understood that set off is important. I did set off on 19th and not 19th. So I did set off on, let us say, so I did set off of tax liability on 19th, but I filed returns on 21st. For April, there is requirement to file the returns. So this question is with the audience, and this is a very good question. So my tax liability pertains to April, which are supposed to be discharged, and the return should be filed. So it says return should be furnished. The payment of tax liability should happen by 20th of the May. Now, what I have done is, in this case is, I have done set off on 19th of May, but I have filed my returns on 21st of May. Whether in this case, one day interest, because I have done on 19th, I have filed returns on 21st of the next month. Whether in this case, interest is going to be applicable for that one day. So this question is for the audience, for all the participants. I'm looking forward to your views. Anyone would like to share his views? The set off happens on 19th. The return filing happens on 21st. Whether interest is liable to be paid for one day, because the return was due to be filed by 20th of the next month.
Shivashish sir, by the conservative approach, हम तो हमेशा ही कर देते हैं.
Okay. So here is my answer on this, because none of the participant is answering this question. So what happened was, I analyzed this thing. When we do set off, my debit entry comes to the credit ledger or the cash ledger. The debit entry is reflected on the 19th itself. And the section says the payment, section 49 says the payment of liability happens whenever there is set off. And the set off entry is reflected in the electronic cash ledger or credit ledger, and it would be reflected on the 19th, even though the return was filed on the 21st. And accordingly, in this case, there won't be any interest liability as far as payment of tax is concerned. However, there would be late fee of one day, which is going to be applicable, because the return was due to be filed by 20th. So Jatan sir has stated 19th. So that's correct, sir. 19th is going to be the date of payment. For that, we should look into the electronic credit ledger or the cash ledger, because that ledger is going to post that entry on that day itself. I'm just on the last case study. Thereafter, we are closing this webinar. Enforcement action by both government departments recurring SCN by the jurisdictional department. Now, when the GST law was introduced, there were various talks in various circles that now the adjudication, or let us say recovery action, or let us say investigation action, would be done by one of the GST department. If in case you are marked to the state GST department, that GST department is going to enforce or take whatever measures are required for the recovery of taxes or investigate your case. The things widened after that. The notices, the enforcement actions were being issued, or let us say adjudicated by both the departments, irrespective of the fact that you are marked to that particular jurisdictional department. How you decide your jurisdictional department is, when you go to profile under my profile tab in GST login, the jurisdictional details which are reflected in red, is the department which is your jurisdictional office. now you decided that my state GST department is a jurisdictional department. They can only investigate, or they can, undertake an enforcement action. They can inspect. However, this later on widened, and nowadays we see that enforcement actions are taken by various, different departments. On one hand, it is being taken by the vigilance department of the state government. On the one hand, it is taken by the DGGI of the central government. On the one hand, it is being taken by the audit wing of the central government. On the one hand, it is being taken by the jurisdictional office of the state government, state department. So now this office note has been issued, wherein it is specifically clarified, and it is accepted on the revenue's favor. And the office note has been issued by the GST Council, wherein it has been specifically clarified that enforcement-based actions, that is investigations or anything related to that, and anything further to that. So let us say issuance of SCN or adjudicating appeal, or let us say whatever is related to that investigation or enforcement task, enforcement action will be done by that authority whosoever has started that action, and that action can be started by any government department, any central or state, and there cannot be any stoppage to that. The proper officer for the purpose of section 5 is only in the case of recurring SCN. Section 5 or 6 does not debar enforcement actions by any of the government departments or by the authorities. Enforcement action can be taken by any person. Now what happens is, let us say my enforcement action, or let us say DGGI has, even though I am marked to the state government office, but DGGI has investigated and issued the SCN for, let us say, 3 years, and that issue is also there for 2 years, next 2 years also. So 2017 to 2020, it was investigated, DGGI investigated, and they found XYZ related things, and they issued notice for 3 years. However, that issue is also prevalent for the next 2 years also, because DGGI investigated during 2020-22 for the previous period, 2017 to 2020. In that case, it is provided that recurring SCNs would be issued by the jurisdictional office. However, enforcement-based SCN recovery appeals would be adjudicated, would be issued by the DGGI, which is the enforcement agency in this case. And accordingly, this GST Council office memo has been issued, and Maharashtra government has also issued circular on this lines. Now with this, I am closing this my deliberation, and over to Shashank sir.
Thank you, Shivashish sir. आप हमारे अब सर हो गए हैं. And जो एक आपका जो जजमेंट आया है, मेरे को लगता है वो रेलिवेंट है, बट बड़ा इम्प्रैक्टिकल भी हो जाता है छोटे के लिए, जो टू रजिस्टर इन एवरी स्टेट. And I don't know what would be the solution in future, because I think कोर्ट ने भी कोशिश करी कि solution दे पाऊं, but I don't think so कि वो solution आ पाया viable. और एक इशू शिवाशीष जी एक बड़ा आता है, इसके बारे में अगर आप मेंबर्स को अप्राइज कर पाए. देयर इज अ मैंडेट. बड़ी कंपनी क्या करती हैं, आप ट्रेडिंग कर रहे हैं इन द गुड्स, ठीक है, आप किसी से खरीद के कहीं बेच रहे हैं, एंड द अदर पर्सन इज अ वेरी बिग कंपनी. वो कहती है मैं मैंडेट अपना ई-वे-बिल बनाऊंगी. वो अपने यहाँ से गुड्स डिस्चार्ज नहीं होने देती जब तक उस पर ई-वे-बिल और ट्रक का नंबर ना डाले. बट आई एम नॉट द अल्टीमेट रिसिपेंट. मेरे को तो वो ऑन द ट्रांजिट आगे देने हैं किसी को. तो क्या वो ई-वे-बिल मेरे लिए कॉम्प्लिकेशंस क्रिएट नहीं करेगा मेरे रिटर्न्स में?
Yes, it is going to create complications.
I have to explain everything to the department.
Yes, that's correct. It is going to create.
So these kind of
for commercial reasons, we have to undertake all these transactions. At the end of the day, money matters. Yes. So.
ठीक है.
I think there is one question which has been put by Jatan sir.
Yeah.
if we not take registration in project state, movement of goods is difficult and there is ITC related issues. Definitely, it is suggested that we should take the registration in that state.
Absolutely.
Even though it increases your compliances, but at the end of the day, I mean, it is more, you are more towards the fact that you are avoiding litigations. Because in one of the case, what happened was one of my client was operating battery rickshaws, e-batteries, battery rickshaw. Now they have taken the registration in Delhi, and in Huda city center, they are operating their e-rickshaws. Now they would be parking their e-rickshaws. They would be, I mean, dealing with the local officers, local people there. And you say that I am not registered here, I am registered in Delhi, does not gets fitted in the practical way of doing things, because you have to deal with the people there and deal with the local officers there. So
Thank you, Shivashish ji, and thank you so much for taking the session. And Manoj ji, really he has shared very good insights. I request Vineet ji, please take it forward. Thank you.
Thank you, Shyamji. Thank you, Shivashish ji, for such a fine deliberation as always. We are looking forward to another GST counseling meeting, and then we are our trademark webinar for that. I thank all the members for joining in. I'm seeing that every member who has been joined in the beginning is still now joined. So that shows the power of our speakers, that they engaged all our clients and solved their queries without them asking the query. I thank both the speakers for taking out time and coming on this platform. Thank you so much, everyone. We'll meet again on 24th.
When is the next session, Vineet ji?
I think it's 24th, sir.
24th. Okay.
Yes.
Chaliye, let's meet on 24th again then.
Yes, sir.
Okay, nice deliberations. Thank you, Shivashish ji.
Thank you all. Thank you, sir.
thank you,
Thank you, everyone. Thank you, Jatan ji, for asking the questions. Thank you.